Wow, okay. If you're interested in finding out more information about the solo 401k versus the SEP IRA for 2021, then you're probably busting your butt and working pretty dang hard, probably burning the candle at both ends. And you know what people don't tell you often enough? You're doing a great job. If you get paid via 1099 income, are self-employed, are a small business owner, or perhaps you're a W-2 employee of another company and you've got some 1099 income coming in from your side hustle, if any of those sound like you, then this video is for you. What's up, guys? I'm Kay Scholl. Welcome to another financial awareness video. So you've made some money this year and you're looking into the best way to save and invest some of it for your future while getting a tax deduction to reduce your tax liability. That's awesome. Fantastic. I'm super happy for you. Sounds like you're on a really good path. Keep it up. Deciding between which of these retirement accounts is a tough call because there are so many variables that you should take into consideration. My goal for you with this video is to give you a clear and easy understanding of whether you should choose a solo 401k or a SEP IRA. And if I'm able to accomplish that, you could let me know by tapping that like button and maybe even consider subscribing to the channel. There's really one word to help you decide whether you should open up and fund a SEP IRA versus solo 401k, and that one word would be organization. How organized are you? Chances are that you have a product or service that got you started with your business, or perhaps you're a locum CRNA mom and are just wondering what's the best way to structure your compensation. In either case, let's hash this out together. If you haven't organized your business just yet, that's totally fine. Don't sweat it. You're watching this video, probably some other ones as well, and you're on the right path of learning and getting it all together. It's all good. Regardless if you are a sole proprietor, single member LLC, owner of an S-Corp or C-Corp, yes, you can open up either of these retirement accounts. If you have yet to formally establish your company, then in the eyes of the IRS, you're what's called a sole proprietor and you're getting paid directly to yourself. And what that means is you're going to see your actual name on the paychecks as opposed to running the revenue and expenses through a company that you create. Regardless if you're a sole proprietor or if you've established your business already, if your net business income after expenses is $76,000 a year or less with a tax filing status of single, or if you're married filing jointly making under $125,000 a year, and you're only looking to save $6,000 a year or less, then you don't need a SEP IRA or a solo 401k. You could just open up a traditional IRA, throw in $6,000 and get a full deduction for that amount. Now, if you make less than those amounts, you absolutely can still create a company and run your business revenue and expenses through that. But the scope of this video is in regards to getting a tax deduction through one of these retirement accounts. And if you're not going to save and invest more than $6,000 a year, or if your budget won't allow for it, then why overcomplicate your life? Good question. That said, if your net business income is higher than those amounts, or if you're looking to save and invest more than $6,000 a year into your retirement accounts, then you'll want to keep watching. Okay, time out. This is where your life is going to start to get complicated. Small business owners usually go through this transition within your business where you go from risking your entire life savings and sanity to start your business, or go through CRNA school, to struggling with your business, to surviving, to the point where you are now of finally having a profitable business and you're researching YouTube videos on how to make the right decision. And on top of all of that, you're probably juggling like 18 things in the air all at once. And you probably have at least one or two people calling you right now trying to become your financial advisor. And all you want is an unbiased opinion and maybe some sleep. You certainly don't want all your eggs in one basket, but the best investment you'll make is by reinvesting back into your business. Sure, you could probably get an 8 to 10% rate of return on your stock market money, but you can reinvest that money back into your business and 10x your money. So diversify as you see fit and don't let anyone tell you they can outperform you reinvesting back into your business. All right, moving on. Here are some numbers for you. For the 2021 SEP IRA, you can contribute up to 25% of your net business income, but only 20% for sole proprietors or single member LLCs, up to a maximum of $58,000. For the 2021 Solo 401k, you can contribute up to $19,500 dollar for dollar of your net business income, plus an additional 25% of your remaining net business income, also for a total of $58,000. There are so many different situations out there. We could literally run a bunch of different example scenarios, but that would be pretty boring and you would click out of the video. So let's just do one example. I'm sorry in advance if this doesn't exactly apply to you, but you'll get the gist anyway. If you're a sole proprietor or single member LLC and you make $100,000, then you could put 20% into your SEP IRA, which is $20,000, and your 15.3% self-employment tax will be calculated against your remaining $80,000, which will be $12,240. Instead of doing a SEP, if you did a solo 401k, then you can contribute $19,500 dollar for dollar, bringing your net business income down to $81,500. Then you could do an additional 20% of that, which is an additional $16,300 for a total of $35,800 into your solo 401k, and your 15.3% self-employment tax will then be calculated based on your remaining $64,200, which is $9,822, which is a savings of $2,417 compared to the alternative. Hey, real quick, if you need to, go ahead and double tap the left side of your cell phone in this area right over here to skip back and re-watch some of those numbers again, because we're just gonna keep trucking along. Remember how I mentioned being organized earlier in the video? Well, if your business is generating this much revenue, then you're gonna wanna do three things. The first thing you're gonna wanna do is go ahead and tap that like button. The second thing you're gonna wanna do is go ahead and watch this video right here about 10 self-employed tax deductions and tax credits. And third, you might wanna consider filing as an S-Corp instead of filing as an LLC or sole proprietor. Might cost you an additional $2,000 a year to file as an S-Corp, but it could be worth it. When you file as an S-Corp, you have to begin paying yourself a reasonable salary. Using the same example as before, let's say you have $100,000 of net business revenue and pay yourself a salary of $40,000. With the solo 401k, this means you can deduct up to $19,500 from your $40,000 salary, which brings that amount down to $20,500. You can then contribute an additional 25% of the remaining $60,000 of profit sharing into your solo 401k, which is an additional $15,000 for a total of $34,500 going into your solo 401k, and you'll only owe the 15.3% self-employment tax on the remaining $20,500 of salary, which is $3,136. And when you compare that against the $12,240 in self-employment taxes paid as a sole proprietor or single member LLC, it really makes you think twice about getting organized. I know it sounds like I'm steering this conversation a little bit more towards the solo 401k and S-Corp combo route, but just know you don't have to go down that path. It does cost money to file as an S-Corp every year, and there could be some pricing differences between the administration cost of the SEP IRA versus solo 401k. So as you can see on the screen here, this is an example of a simple review of Vanguard's website, which shows $20 a year per fund for SEP IRA balances under $10,000, which is waived for accounts that have more than $10,000 of Vanguard funds, versus the solo 401k, which has the same $20 per year per fund charge, but doesn't waive that fee until you have $50,000 in your solo 401k of Vanguard funds. However, the other advantages of the solo 401k over the SEP IRA has to do with a few more things. Over the span of the earlier part of your career, if you didn't save up enough money into your retirement accounts, the solo 401k allows you to make catch-up contributions once you're 50 years old or older, which you cannot do with the SEP IRA. You're stuck with the fixed amount of 20% or 25%, depending on how you structured your business. With a solo 401k, you can take out a loan and pay it back over time, but with a SEP IRA, there are no borrowing provisions. For the solo 401k and several other retirement accounts that allow borrowing provisions, in 2020, through the CARES Act, you were allowed to borrow more than normal. On a normal year, beginning in 2021 and moving forward, you could borrow up to 50% of your account balance up to a maximum of $50,000 per year, and the standard repayment period is 5 years. And if you do take advantage of that option, just be careful because the very next paycheck, you're going to have to start to repay that loan back. So be mindful of that. Also, with a solo 401k, you can have a Roth 401k provision. Now, that will erode some of the tax deduction benefits that we reviewed earlier, but if you are a successful self-employed or business owner, or if you're a locum CRNA mom and you make too much money to be able to contribute to a Roth IRA, then that's at least something that you should consider. If you're a rock star and your solo 401k balance grows to over $250,000, then you've got a couple different options. Option number one, you file Form 5500, which any CPA can help you do. Or option number two, you do what's called an in-service distribution, and you simply roll over some of those pre-tax solo 401k dollars over into a pre-tax traditional IRA. Or if you've taken advantage of the Roth provision within your solo 401k, you're going to want to go ahead and move that money and transfer it from your Roth solo 401k over into your Roth IRA to avoid the $250,000 threshold filing Form 5500. What's up?
I have 500 Robux. I'll give you this. This is all my money.
Okay. You need to save some of your money.
Fine, I'll save this.
No, that's not $5. I can see right here, right now, that's $5. We're not spending $5 more on Robux. I'm sorry. You need to save your money for the trip. On the flip side now, if you think your business is going to grow and you're going to be hiring people moving forward, then you're probably going to need to make some changes from the material that we discussed today. For example, with the solo 401k, the only other person that can contribute would be your spouse. If you hire people, you no longer can do a solo 401k. On the flip side, with the SEP IRA, once you start hiring people and those employees are now eligible once they've been employed by you for 3 out of the past 5 years, then whatever you contribute to your SEP IRA, 20-25%, you have to do the exact same contribution for every single employee. That's like giving everybody a 20 or 25% raise every year. And I have yet to meet a small business owner that's willing to do that. So if that's you, you might want to consider changing to a simple IRA or possibly a 401k, depending on your business's situation. So please subscribe and stay tuned for future videos to help you through that process. To help you get started, you're going to want to watch this video right here about self-employed tax deductions and tax credits for 2020 and 2021. If you have any questions for me, let me know in the comments down below. I appreciate your time. See you in the next one.